Anyway, welcome to today's stream, I should say. It's been a while, and this music is buzzing in my ears, so I'll stop that. There you go. Now I feel better. What a fantastic way to start today. It was beautiful. You can see my screen, right?
Yes, I can.
So yesterday's video was about the market phases, and obviously it took me a while to understand it, so I don't expect everyone who follow my channel or who are members of our team here to instantly grab that change. It took me at least playing around with different stuff for the past 12 months or so. Usually people would not expect somebody to say, you sell a system or you sell membership and stuff. That means you are already successful and that means you should not change anything. That's actually not true, because you can find better ways of trading, right?
Yep, always.
And
Open-minded enough.
yeah, and when you find them, you want to use them to your advantage. So I think the main thing that got us into this discussion was, I'm actually forgetting, I didn't make a note from yesterday. There was something that we wanted to discuss yesterday. Or I think, is it the same thing? Is it the same thing we were talking about? The phases?
Yeah, the phases and adjusting your trading, like which trading you're using for different phases, I think.
Right, exactly. Okay, so let's...
So step one was identification of the phase, and step two is identification of the right trading methodology to use with the right phase.
You hit the nail on its head. That is... It took me a while to understand this. And when you have more indicators, the indicators will keep you, whatever the number of indicators. For example, you have a 10 EMA, it will keep you in the past 10. And 34 means the past 34. And the thing is, the market could actually change in 1 minute. In 1 minute, it could have changed, and you will not know it until the next 10-15 minutes. So let me get back to that in this video, or in this in this talk. I made a few points. So the question I earlier asked you was, you asked around here. Let's go to KC. So you asked over here, or price was here somewhere, and you said something like, okay, we have to wait for the new price to come back inside the KC, and then we can go looking for a long look, for example here. And the problem there was, I said, my question is, why do we use a pullback entry? I mean, why do we use it? Do we just look at the chart, and if we see a pullback entry, for example here, there's a bear pullback entry, just go short, right? This could be a bull pullback entry. If I code a pullback based on what is a pullback, then this would be a pullback entry without a filter, right? This is a pullback lock entry, but why am I not long? In fact, you went short here. I don't know why. Actually, I want to ask you, why did you go short here?
No, I didn't go short there, I went short. Oh, where did I go short?
It was here. As soon as I got out, you went short.
That was the next one. It was the next, that bar.
This one?
Yeah.
Yeah, it looks like a nice pullback, isn't it? 3 trend candles, then nice pullback.
I had a break of my box. But it hadn't gone
and
below
it's below the box.
But it hadn't got to the edge of the KC. So.
But I could, hold on. Let's go here, the KC.
It didn't poke out the KC.
it's not a KC entry anyway. It is a pullback
Yeah.
entry to go short. But when you take this entry, just by looking at the chart and just by looking at the pattern of the pullback, then okay, you're just looking for entry. And that therein lies the problem. You are simply buying a ticket at the train station simply to hop on the train. And when you hop on the train and somebody asks you where you're going, you're saying, well, this train is for Piccadilly. That's where I'm going. And if somebody was to ask, why are you going? You say, why are you asking me that? Your answer would be, my job is to buy a ticket and hop on the train. Wherever it takes me, that's a different thing. Also, what are you going to do when you get to the other side? I'm going to buy another ticket. That's not what we're doing, are we? And for that, I wanted to talk about this. I have this simple matrix created for me now. And it took me years, but I think it's pretty objective. Contrary to what the comment I received was, why was I going into assumption-based trading? Well, there's always a bit of assumption anyway. You know, you're assuming based on some evidence or experience that at the London Open, why do we trade at the London Open? Is because we expect there to be higher volume. By higher volume, I mean there will be a lot more trades. So let's mark this. That's the pre-market. This phase is the pre-market. We can see here today that the pre-market was an uptrend, right? It is an uptrend because we have a series of highs,
High low.
and then you have another high, and then towards there, and then you have a higher low and higher low. And it's going up. You can put channels if you like. And I asked this, so the matrix that I've created is something like this. So at the open, the market will either continue the same phase as the pre-market, or it will change. So that's one binary that we need to understand. Binary 1, is it going to stay in the same phase or is it going to change? But it would benefit you to understand what phase is the pre-market in. So we can see that it's a mild uptrend. It's not very strong, but it is an uptrend. So when the market opens and the volatility hits the market, volume goes high, it will either break into a trend or it will continue. Well, in this case, because the trend was up, this would be a resumption of the trend, but with higher volume. So you'd expect the market to move differently and strongly in that direction. That's what we saw today. So it's an uptrend, but as soon as the market opens, it continued that uptrend in a very different way. Now, yesterday, it was different. So in my video, I talked about, we know that the market usually stay in a range. It will be like this. Actually, let's look at this. So this is the range, right? This is the trading range. Why is it a trading range? Because we don't have the highs are all the same and the bottoms are remaining here. This is actually the same. So that's trading range, up and down and up and down. Now something will have to happen in the market to change this phase. So we are in a trading range phase. Both the bulls and the bears are making money because it's not a tight range. If it was tight range, the bulls and the bears both will not make enough money for them to be interested in it. And I'm talking about the computers and the human and everyone, but mostly it's computers in it, isn't it? So as soon as they find out, oh, the range is tight, it will be better for them to actually wait for the breakout to happen. And when it's in a wide trading range, they believe in the range so much they even sell above the range here. and that's what brings price down. I mean, what else is bringing price down? How else can you explain this, right? Somebody is selling there. they are getting rid of those stocks, right? We're talking about the 30 stocks, 30 top in on the Frankfurt Exchange or Xetra or whatever. And then when it comes to the lows again, they buy again. Why they sell and buy, we don't know. We just know that right now in front of me, I see two phases in the market. One was this trend phase. It was a trend channel. And today, the market broke out differently than yesterday. Yesterday, I feel like it was just a few minutes ago. This breakout, literally the time in between has kind of vanished. And this is probably because I'm on the charts all day. It broke out up, then it came down. This was a beautiful pullback, right? I did not see it as a pullback at that time. That was the only problem. But if you look at it, when it started breaking here, this is a very strong breakout phase.
Yep.
And this is the first candle that went against the nature of this move. The market is telling you that a change is on its way. And the next candle does not break the low of it. And then the next candle is very small. By this time, you have established that you have at least a kind of a triangle or a wedge going on here. Not a wedge. Wedge. Always find it difficult to pronounce the V and W differently.
Okay.
Yeah.
You can say veg. It's just going to sound a bit odd.
Now, if you're from Pakistan, naturally, you would you would call Watson Watson.
Oh, okay. So
Yeah.
like Germans.
And when you say, it is like Germans. When you say what, you'll say what.
Yep.
And when you say very, you'll say very. That's how Indians and Pakistanis and all that we do that, and that's how I actually do the accent correctly. If I do the Indian accent, what are you doing? It's a strong T and a strong D. It's not a D, it's a D, and we don't say T, we say T. So what the? Anyway,
Yep.
Understanding the phases of the market and how it changes, that's what we're talking about. I mean, it took us a while, but we're there. You don't need moving averages for that. You need to look at the price. The chart looks messy at the moment. Let me bring it. I kept posting the pictures, right?
Yep.
Every time I was updating it. So we like it if it breaks out. Like you said, you like the momentum breakouts. Yeah, who doesn't? Because it's very easy to manage that trade, isn't it?
It is, yeah.
Bull candle, bull candle, bull candle. Like, for example, on M5 chart yesterday, if somebody was trading M5, this would be very easy to hold, relatively easy. I know it's not easy because if you make an entry here and you're sitting at 50, 60 point profit, it's very difficult to stay in there. But there's no better way, there's no better thing than to stay, because there's no indication of price even slowing down until here.
Yep. Yeah.
So if you got out here, it's too bad. If you got out here, okay, because your win is big enough that you will survive the rents that you are going to pay in the next. But if the pain is too much, then close half, let the other half run. But the problem with that then becomes is that if you start doing close half, what traders will start do, and the reason I'm saying traders is because I've done it, and so I know that if I can do it, then other people will be doing it as well. That the moment you start taking half, you'll start taking half here and here. And then the trade goes so much in your favor, you don't really benefit from it. So the close half shouldn't be in the beginning of a trend. Unless it's a strategy like the Forex C strategy that we had. That was a part of the strategy. It's a different thing. But if you close half for the psychological reasons, then it should have given you profit. So closing half before 2R, it's not good. Go on.
But even without that, like that momentum run there, with the candles not even overlapping their previous candle by more than half, you shouldn't be probably taking. So see, none of those candles overlap.
Very good point. Yeah, very good point. These two, for example, these three candles, these are very strong trend candles because the closes are very near its low.
Even the next one.
And even this one. So there's 4.
Yeah. So it's not until that doji that you're actually getting a candle that covers more than half of the previous candle. And so that's for me. That's what I'm using as a little measuring stick for change in momentum. That's
a very good point, Elena. That's fantastic. You obviously have very good grasp on technical analysis. You've done a lot of work on this.
Well, I have some grasp. Not
you do. You are pretty good. But we know that really it's not about how much knowledge you have in technical analysis. It's all about if you have put together a process for you that you can follow. I think it's all about that. And so that's a very good point. And in this case, it was really a halfway, right? This was a halfway measure, almost serving as a hidden inside wave 3 and a 4 and a 5 that's going down. And yesterday we were talking about this, and this is a good example because a very strong breakout phase, then it changes into a trading range. As traders, what we do is that we keep everything connected. We think it's the same market, the same players, and the same thing going, but that's not the case. Market changes every minute, every second. New players, different players, different objectives, and that means that market reacts differently. I did not used to believe in this. I used to think more about trading chaos, and it wasn't the concept of the trading chaos that was wrong. It was just my understanding of it was wrong. That everything can be explained, but in a fuzzy way. Actually, the reality is you can explain things in a rather more objective way. And market does change. I used to struggle with the concept of how can the market change between this time and this time. Mm-hmm. I did not accept that. But actually, the reality is that the players, the way the market was here, the structure of it, between this time and then this time is completely different.
Yep.
Because here's the bulls and bears are balancing each other, whereas here the bears are winning the game. So we have to know that this has happened, and then we need to know what we should be doing when we see the change. So back to that question of, actually, let me bring a clean chart.
So when I was first introduced to trading, it was a concept of trading as a zero-sum game.
It
but
is,
I don't think it's true, because everybody's trading different concepts on different time frames, on all sorts of things. So some people can look like they might be losing, but they might have actually won.
Yeah, everyone is.
They're on different time frames.
They're on different time frames. Yeah, there could be a big institution buying every time it dips, and they have bots running for it. They have VWAP going on, volume weighted average price. Every time price comes back to it, they keep buying, and that's why they don't want to cause spikes in the stocks. Obviously, these are the stocks that you probably can't cause spikes unless you're doing hundreds of millions at the same time, but still they have those methods or whatever. See, quickly I have drawn lines already. Okay, so you were saying?
No, that's all.
Okay, yeah, that's true. Those concepts, I think when you trade Forex, it's quite different.
They're kind of limited. Yeah.
Because Forex is buying and selling, I mean, what are you selling and what are you buying, to be honest? Because for like a euro dollar, if you buy one, you're selling the other. It's a derivative. It's a different thing.
Yeah.
But in case of a stock index, you literally are looking at the composite price of 30 stocks, and there's psychology and there is fundamental evidence and basis going on underneath it. I mean, institutions don't buy things just because they want to buy. They see value in it, right? They're buying, they're investing in BMW, or they're not investing in it. They're investing in Volkswagen and Siemens and all of those companies, all of the good German companies, and economic factors and all of them. Their long-term views, short-term views, all of them kind of go in there. So the first question is, why do we trade at the London Open or at the Open? Is because we are expecting that there's a higher probability of higher volume, which would create trends. I mean, higher volume can cause range as well, but higher volume can also, in most cases, create a trend. And because we think that is true, and it is actually true, we want to get in that trend as soon as possible. So today, on the 5-minute chart, I saw the market like so. This is the first phase. I'm looking at the market. It wasn't looking good on the, am I on the fifth? Yeah. On the M1, it kind of looks like a range because it's quite sideways, but if you squeeze it, you can see it's an uptrend. So at the open, it might, it will then, again, a binary thing. It will either continue the market phase the way it was. There will be a resumption, in this case, a resumption of trend. Or if it was in a range, there will be a resumption of the range. So that's option one, scenario one. In the second scenario, it changes what it was doing. So now explore what it can change to. Well, if the market is trending up, it can change to either a trading range or a downtrend. If it was in a range, then it can do only one change either side. It's going to turn into a trend. And then you can ask two things, what type of trend? So sometimes it would, on the 5-minute chart, if you look at it at least, it's a breakout. So a breakout is a trend, but it's a breakout. But on the 1 minute, it wasn't a breakout trend today. It was a channel.
Yeah.
And if you don't understand this, what's happening in the market, like let's suppose we are at this moment. If you don't understand this bit, you'd get in and you'll get out. You'll get in and you'll get out. That's not fun. The reason I stayed in this was that when I got in, stop loss was below here. And the only reason I should be getting out is that if price goes to below this. Because if I get out anywhere before that, I don't know what I'm doing, right? And it goes up, gives me a second high. I can see that it's a high, strong rejection. So the bears are actually winning there as well. They're making money. So if you went short there, you made good 20 points. But it creates a doji, another doji, kind of pausing around here, and then boom, breaks. Comes to that level, stops, pulls back, boom. And then there was a shallower pullback. So then I had a chance to say, okay, now I can actually draw this kind of trend line. It wedged itself, came below it, but actually started going up. So then I thought, okay, I'm going to put it here. And then after that, I put it here. And then after that, I put it here. And then it broke out here. And likewise, around that time, I think it closed below the 10 EMA as well. I got out. So multiple entries, multiple exits to keep me in the trend.
So when you redrew your trend line,
Hmm.
what makes you comfortable that redrawing your trend line is the right thing to do as opposed to, oh, my trend line is broken?
Well, the most important thing to understand is I'm only drawing something to understand the symmetry of the market. I'm not saying this is a line where price will bounce off it and stuff. Not from that perspective. People do that. First touch, second touch, I'm on the touch, I'm going to go long, that kind of thing, or a trend line is a support and resistance, that kind of thing. I don't think that is correct. I only draw trend lines as simply to mark the territory. Like you just mark something.
As a
Okay,
visual aid.
there. Yeah, just to say. And when the symmetry is kind of breaking, but the market is still going up, for example, over here, thinking, okay, there's some kind of a new low, the market's still going up. I think I should use this as a low. So then what would break this symmetry? And that's a very good question. What will break is a strong trend candle. So over here, I'm not seeing that. I'm not seeing that. For example, when I had my line here, and when this broke, can you see this? It's not a strong trend candle. In fact, it's a doji. So I'm like,
Yep.
No, nothing's changing. Nothing's changing. But when this happens, there's a new high, but there's a tail, and a trend candle, a second trend candle. I'm thinking, all right, okay, things are changing now. I could possibly still do this. When price started to go up, I could still do this because it's still correct. It's nothing wrong with that, right?
Yeah.
But what would have happened is that when you did that and you're still in the trade, this started to happen. While it was happening, you'd be thinking, all right, great, it's resuming. But it fails, starts to go down. Now confirmed that the market has changed. So I'm going to get out of that market because it changed, right?
Yep. Yep, that makes sense.
And there goes that thing that what got you into the trade over here, those things have changed now. So now you have to change your trading and trade accordingly. Because now we have a series of highs. And then this does not break the low. If this broke the low here, then we would be looking at a trend reversal or a change in trend. But right now we have a series of bottoms going on. So if you didn't realize it here and you went long, you still had a good scalp. But when this happened, then you shouldn't be considering this as a pullback. And that's the most important thing that I want to talk about. When you see one failure here, you can't, you can still go for one more, right? Okay. But when it happens second time, now you have three tops. You can't consider this as a pullback. It's not a pullback. It's actually a trading range. And now, nested inside the trading range, you even have a tighter trading range, right? It's an even tighter one. So you make money here. Yeah?
So what I had done was I had drawn my trading range in too early, so before that, those first three bear bars that came down.
Which
I had
ones?
drawn it.
This one?
Yeah, so I'd drawn, because we had those 1, 2, 3, 4, 5, 6, 7, 8, 9 candles kind of straight across. I had drawn a box under those. Yeah,
right,
at that
over
level.
here.
Yeah, so then for me, those bear candles look like they were a breakout.
Yeah, that's not bad.
See?
That's not incorrect.
So that's why
You went short.
probably will. Yeah.
Yeah.
That was my thinking at that point in time.
It's not too bad actually, but my problem with that is only that the market actually steadily went up in a channel.
Yep.
And this information, the 1 minute chart, was not enough time. This is just like 10 minutes for anything to happen and change. Plus, you don't have two bottoms right now. You have to wait for this to happen. Actually, you are in a way right. I mean, this is a too early attempt. Sometimes it would actually work. You didn't know this was going to happen, but you accepted the trend reversal too early. If I take you to the 5 minute chart, you actually went on this short here straight away.
Okay.
So that's
So
not.
if I
Yeah.
flip over, if I have a look and I see something on a 1 minute chart and then confirm on a 5 minute chart, I would then see, oh, that hasn't actually changed yet.
Well,
So by looking
essentially,
both
you
time
just
frames,
traded the fruit short
yeah,
on the 5 minute chart.
yeah,
But the reason I'm taking you to the hourly chart is that this is where my target was, my hard target.
yeah,
Based on these highs, yesterday's highs and stuff. So it is a good idea, but if you are going for a major trend reversal, then what you need to understand, for example, if you're taking on the 1 minute chart, it would be very difficult if you're going for the overall reversal. So suppose you went short here, you had to, well, two ways of doing it. You have a small stop loss that quickly get hit, and you get out. You say, okay, the idea didn't work. But ideally, if you're going short from here, your stop loss has to be up there, because only that's where you'll be proven wrong. When the trend resumes is when you'll be proven wrong.
yeah.
Or
Technically,
it's also correct that if you just went short here and quickly got out, you use the concept that, oh, I was looking for a immediate reaction, but it's not happening, so fuck it, I'm going, right? Because you know that, okay, I'm looking for a trend change, but I know that if a trend doesn't change, two other things can happen. It might go into a trading range or the resumption of trend. The probability of resumption of trend was low because it was just now changed from trend into a trading range, sort of, which you perceived as possible trend change. But what happened was that your assumption was wrong and it went into a trading range. So that's it. But why do we take a pullback entry is we want to get into a trend. And so the next question is, where is the best point to get into a trend? When ideally, right at the beginning of it, right? Ideally, I would want to get into a trend. And that's what makes people trade breakouts, because they're like, what is the best way to get into a trend early? Well, trade a breakout. Beginners would always look for that. That makes sense. But they all know that. So they go against you because they have more money to switch it around, right? So around here, when everyone's looking for breakout, they sold. Or you could have had people who went short here, and then they added more here to get a better position.
Yeah.
Right? Or you had people who went. This is what happens as well. This is where you have buyers here and buyers here. They waited through this, then they bought more here. Right? The buyers here because they're going for the trend continuation, but they get disappointed, price comes down, and as it tapers around here and starts to go up, they buy more. So what happens is that when price comes back to their previous level, they exit out of this break even and they take this winner.
Yeah.
So what do they have to do? They will sell. So they have sold twice, and when they sell, the price goes down.
Yep.
and volume then goes down, because so up to around this level you still have those buyers and sellers from this phase stuck in, and by this time they're all now out there. There's different players going on now. The market is
So
changing.
now, looking at what's happening right now,
Yeah.
the market is kind of sneaking out of the range.
Yes, we have
Is
a
this
wide.
when we would now start to look for new entries? Like look for whatever indicator.
Well, for me,
or whatever.
I would want, because it's not the open, because it's coming to the end of second hour. I would want something to fundamentally change, and how would I know that something's fundamentally changed? Is a strong breakout.
Yeah. Okay.
So I won't be just because if 2-3 candles like this and then it pulls back to it. I'm not gonna trade it unless I see strong breakout. Then I would see if I can, if I should look for a pullback or I should go straight away. So for example, like there are ways of getting in the market. For example, this first candle, right?
Mm-hmm.
So today, if I trade the trend candle, I'm long from here, my stop loss is here. Market's going against me, comes a pullback, I add on to my long so that my average position gets better. So for example, if I went long here and I was long there, my average position then is this.
Yep.
Then it goes up, comes back, I add more to it, my average position is getting better. Now if I add to it, my average position is going to get worse because now it's above
Yep.
my price. So if I add on here, my average position will come back there, then I'll have to wait a bit more. So that's why I took entry here and I took entry here, because here I wasn't 100% sure, but then when I did second time, my position was 100%, went, and then after that we just had to just let it run. I could have added on every pullback, to be honest, today. Hindsight is gold. It's always so. The reason we choose London Open is because we have this higher probability, and this is why I find it difficult to then trade afterwards, because I'm looking at the phase. This is phase one. Today we had a trend channel, then it's turned into a trading range. I can trade this. I will trade it with lower lots, quarter of a risk. If I was paying attention, I was just satiated with this profit. Long here, get out there, short here, long here, probably get out break even, and then after this I won't trade because it's getting tighter. Now if this happens, I want it to be strong, pull back, then go down. But if we look at the hourly chart, we know that we are in some kind of a range. So let's go to the daily chart. Okay, one more thing before. I think I haven't. Well, I did actually address that thing. This was the most important thing to note. So if you understand the basically two phases of the market, one is a trading range and the other one's a trend. And then in a trading range, you have two types of trading ranges, a tight one and a wide one. Wide one you can trade inside, tight one you cannot trade inside. Breakout works only, or relatively works better, when you trade a breakout of a tight range with the idea of resumption of a trend. That's setup one. Setup one basically is you have evidence that there's a trend. That's wave three. The wave three is not extended and it's not too small either, for example, in that case, if it is. And then market goes into a tight trading range. You want to trade the breakout of that range in the direction of the wave three. That's setup one. Obviously there are benefits and advantage, disadvantage of both the methods, but there is an edge. There's a solid edge there. For example, if you were trying to trade the breakout of this trading range, you are missing a point. There has been a climactic parabolic move here, and there's a lower chance now that there will be a resumption of trend after this. So the market cycle, Elliott wave, these two different things, the market cycle does not assume that there will be the next wave based on this. It just keeps you connected to the current market phase. You want to see that, and then what's it going to do? So we know that it's a trading range. Now we are seeing kind of a breakout out of it, but I won't call it a breakout. It's just kind of itching, like, you know, yeah, it's coming out very like a scared, what should I say, cat or something.
Mouse.
A scared mouse, right? Yeah, you're coming out of it. You're just looking around and should I really? No. Well, so the phases, and it's really important to know when to use the type of entry method that you're using. So to sum it up, if you want to use a pullback entry, you need to know that pullback entries are used only for trends.
Yep.
And trends are of, let's say, three types. We have a wider trend channel like this one,
Yep.
in which you both have deeper pullbacks, which means the bears are making money, bulls are making money, bears are making money, or let's say bulls are in charge, bears are in charge, bulls are in charge, bears are in charge. If I switch this time frame up, that wider channel has actually turned into a tight trend channel. This has turned into a trend channel. It is not a breakout, it's a tight trend channel. Why? Because you have wicks going on. So every time you see a wick, you know that a lower time frame, there's going to be a pullback. There's a pullback.
Yep.
There's a pullback.
Yep.
And when you see a bear candle, then that means you at least have 5 or 6 or 7 bear candles going on the lower time frame. And then you have a breakout trend like this. Can you use a pullback entry inside a breakout? Not really. So how do you get in? Then you'll have to use micro pullback, or you have to use simply the trend candle. So the earlier you're in, the better. I think if it pulled back over here, I probably wouldn't have taken it. Because, 100, 110 points, most probably I won't take it. So this, for a beginner, when they see all this, and then the fear of missing out, and then all the, oh man, I was sitting there and the market just so crazy going on, and the energy builds up, boom, they go short here and take a nice juicy minus 40. Maybe even let it run all the way up there, thinking, come on, it's going. It has to go.
Yeah.
Not realizing the market has actually changed third time. That's the breakout down, then you have a trading range, and now you have a breakout long, and they're still holding on to their shorts. And then the market goes slightly in their favor. They think, oh God, it's finally going. And then it starts to go up. And, all of that keeps going. And they probably get out there with a huge loss. And then they see the market going down again, and they think, what the hell, man? When I got out, now it's going down. They go short again. Market goes up again. They get out there. The market goes down again. Going angry. Get out and say, this method doesn't work. Let's get out. Forget it. This is all gambling. That's kind of, I summed it up. What
Been there, done that.
What goes through my head.
Got the badge to.
Yeah.
Yeah.
So, my idea is to take advantage of the 1 minute chart at the beginning, because there is a lot more volume. So the 5 minute will not probably give you a pullback. But if you know how to work with, a subliminal or whatever underlying pullback, like in this case, you can use this bear candle, or instead of using the bear candle, you can actually just quickly drop to the 1 minute chart, right? Take this pullback, have your stop loss here. Initially, that's what I wanted to do. I went there, stopped, but what happened to me, I think, today actually, my first entry was here. I actually did take, it is kind of a breakout, but it's not a breakout because it was a resumption of trend. So I thought, okay, I already have a pullback, I already have a high. So if I'll just take the high of that with stop loss below here, I had my stop loss at 50 today, because I wanted to just see what it's going to do. And that allowed me to actually stay in there because my stop loss was wide. I could play with it, but at the close of this candle, I wanted my stop loss to be here. So I hit the close candle button, this one, trail candle, just to being lazy. Instead of dragging it and putting it here, I thought the script will do it. Well, actually, hold on. Is this what I did? I think I did it somewhere around here. I don't know what I did, but something happened and I got out break even.
You must have done it on M5, and then when you changed to M1.
Yes, yeah, something like this, yes.
That's the problem. Once you've set it, it doesn't identify that you've changed what chart you set it on.
Yeah, I did something like that.
Yeah.
And it was on trail. Oh, yes, exactly. So it was on trail candle, and I think price was somewhere here or here. It got me out break even.
Trailing candles on M5 would have been perfect.
That was the idea. That was the perfect idea for that, because you went long here, your stop loss is here or here. I mean, even this stop loss would have been pretty good, or here. 20, 25 or 30 stop loss like I have would be nice. And then I literally wouldn't have done anything, just talk to you guys, and then trail candles and you get out there. Because if the M5 does not break any low of any candle, then on the 1 minute chart, the box is going to be going up and you'll be trailing boxes. So basically trailing the M5 candles is like trailing the M1 boxes. So the reason I don't use boxes anymore is because, one, I can see it with my eyes.
Yep.
And the second thing is that a box of a 1 minute chart is simply the high and low of the 5 minute chart. So like, what? Really? So we did all of this work and, fractal geometry, blah, blah, blah. And all of that existed in candles? Forget it. Let's not complicate things. We just look at candles. Yeah, look, almost every M5 candle, especially when it has a little bit of a wick, you'll have a box there on the 1 minute chart, just like that.
Okay.
And when you have a little bit of wick, there will be a box low somewhere here. Not all the time, but in most cases. As you can just see on the 5 minute, between 5 minute and 1 minute, this is what I do. H1, M5, M1. I stay through that. And I think having the charts like this, but, not just charts, because if you put a beginner on an empty chart and don't give them the technical analysis and the phases of the market cycle, stuff like that, then they don't know what they're doing. Why are they doing it? Even like in your case, right? You've been with us for quite a while, and I still identified the problem with your question, like, whether I should be taking a pullback or not, or your idea of going short here. I think these ideas don't have an edge. Like there's no edge in this idea, not a strong edge, because the premise is wrong. The concept is, you're expecting a trend change too early. Now we are seeing a trend change. Like you said, this would be a breakout trade. I'm scared that if I go short here, they will take the price up. And it happens. Look, they tried. Look at this candle. They tried, but the bears won. But there's no volume. So, these guys have taken their money, or whatever investing was going on. They're happy with their investment. They're just holding on to it. and other people are taking, whatever they're doing. Now,
Hey,
from
guys.
from the start. Oh, hi Sam, what's going on?
Okay, I'm going to sorry to interrupt. You can mute now.
Right. So I think we're coming towards the end, but Sam's here, so we'll have a little chat. Today was a very good day again. Very simple trading. I think if you ask me, from my point of view, you gotta create your own kind of structure. So on the chart, like what we see right now is the KC with 10 EMA. I don't really want to have the 10 EMA in there because it then messes with my brain. What I want is, it's not going to happen all the time, but today was ideal. You either have the trend, where did it go? I think I've deleted, no, yeah. You either draw your trend channels like this, or just eye it, just see it, or you have some kind of a channel. Just decide on one. I think 20 is the best, right? KC, the 20.
Yep.
When there's a trend channel, it's going to stay between the middle and the upper band. It's going to keep going up and down and up and down. Did you know that today there has been not even a single, I think we can probably class this one, a single free bar. A free bar would be the one which is completely out of the band. The low is higher than this band. In this case, the low is kind of almost.
On M5 there was.
Well, M5 is a breakout phase, right?
Yeah.
So, but I don't think the KC is telling the truth on M5 until around 10 candles, because up to the 10 candles, it's giving you the average of these candles and these candles.
Yep. Okay.
So that's incorrect information. So KC would come into play around 10, 15, because it's the average of the last 20. So if you look at the 5-minute chart, right at the open, it's giving you the story of the pre-market.
Yep.
But still, in a way, it's correct, because the pre-market was, based on the concept, okay, I want to analyze what's the pre-market. The pre-market is in an uptrend. Okay, is it going to do the resumption of trend, or is it going to be going into a trading range, or is it going to reverse? In this case, there was a resumption of trend. You're expecting higher volatility. Now, because the volatility of pre-market is low, you would expect the market to actually go out of the outer band, because the volatility is going to be double and triple of what it was. And that's exactly what it did. Around here, you have your free bar. So as soon as you have a free bar, you start trading the candles. The KC method is objective. It's methodical. You don't trade pullbacks like this. Same concept that I was trying to explain this entire session is that we want to get into a trend, and we want to get into the trend at the beginning of it. So when you see a pullback here, what are you doing? You are saying that the market has moved this much, but it still has the power to move further up, even though the market has told you that I'm not creating higher highs. So this is not a pullback. This was a pullback, but still it's just recovering from the climax. So a pullback should not be after a climax, a parabolic move. Oh, look at that.
There it goes.
So this is now breakout. You see, this was a slow and kind of, a lot of people would trade this, and I've seen people trade it like this. So the concept that you were going through, the trend change, it was valid. Your stop loss was wrong. You had to have a 25 stop loss for that. You'd be a winner now. But you were on M1, so I don't know. I mean, why should you?
Early.
Yeah.
Yeah, that's okay. I'm okay to be wrong.
But it happens. We've seen it so many times. 1 minute chart, it just turns around. But I'm not going to do that. I won't do that in many cases. Like if I have a very strong winning situation here, You can see, I'm not even paying attention to the chart here. I mean, if you look at it on the 5-minute chart, no, this wasn't really a good trading scenario for the 1 minute. This is not good, not ideal. But if you look at it, I mean, we were looking at it all this time. That same thing breaks out, pulls back. Wow, yeah. Hold on, this was a pretty good entry.
Yeah.
See, my brain was switched off from looking for trades, and that's kind of a good thing for me. It took a while to find that switch on, switch off. Sometimes I'm switched off and the market is just ravaging, moving in front of me. I'm switched off. I'm not trading. It's like right now, this was a good opportunity, but
Yeah, I took the shot.
So it comes back to what you said at the start of being able to not being so focused on the entries, but being focused on the
exactly.
the
Yeah,
market.
that's a nice way to end this session. I would say, you put it right. And Emma put this in her journal, which she found through experience.
Yeah.
Is that she switched suddenly from looking for entries. Before you look for entries, you want to understand why you're looking for entries,
Yeah.
the conditions that you want to use that, and that's it. So if the condition was sideways market, you're not looking for pullback entries. If the condition was here, if your assumption over here was that, okay, we have a breakout, and then you took this pullback, absolutely right. Why not? Sure. Great trade, I would say. Very good trade. And because we were talking, you can't really talk and trade at the same time, and at least not me. Guess what? On KC, it was still not valid.
No, because it didn't cross over.
It didn't really. Although, if you were clever enough and you had to use, limit orders and stuff like that, you probably took that, but not really.
Get a second go at it.
Yeah. And then when the M5 is like this, okay, so I'll take you to the 5-minute chart on the M5 on the empty chart. There's a very good opportunity here for a short on the 5-minute chart. I don't think I can see it nicely on the M1 chart. But if you look at the 5-minute chart, you have a trend candle. Well, not really trend candle, but a bear candle because it's got 2 wicks. This one has closed outside the range. Yes. I think if we weren't talking, we were paying attention, most probably you would have taken quite a few trades by now if you were not talking to me. And most probably you would have taken the short as well. I probably still wouldn't have traded anything because I'm quite happy with this. I'm quite happy with this. That's another way of, it's your style what you want to do with your trading. I mean, here I've hit my targets and stuff. I don't want to mess with it anymore. I'll wait for New York session because I know I'm going to do some more trades. Now I'm going to hit the gym and stuff like that. This break between the two sessions is very important because if you don't, then you're stuck with the charts and you probably overtrade. And then you're too tired to actually come back to New York session with a fresh mindset. But I mean, looking at it now, obviously, this would have been a nice trade.
Yeah.
Do you wanna apply the boxes, Imi, if you have a box?
Which box?
The AIMS box, please.
You want me to put that? Okay, hold on.
No, if you have handy, otherwise it's fine.
Oh, I haven't updated the license. Oh, a lot of people. Oh, sorry, guys.
No, that's okay. I think Vicky asked for a message.
That is why my what's names aren't working.
Ah,
So
the
M1.
Scooby.
If you switch to M1, that cherry that you were showing, so over there, right? I noticed it's now reversing and switch to M1.
Did you hear that, Elena?
Can you say that again?
Did you hear that? The way he pronounced reversing.
No.
Okay, that's what we do, Indian and Pakistanis. We pronounce v as v. Anyway, yeah, what were you saying? Let's go to the
You want to
M1.
switch to?
M1.
Yes, please. Yeah.
Hmm.
And that was my entry below the box. Yeah. So I saw the pin bar, but I waited for confirmation. And it's just right below the box. I took entry.
I still call this a doji because it doesn't have a long tail, but I know
Yeah.
like I said, it was a pretty good. So what we're seeing right now is market going into a third phase from the open. So the open, we have a trend, trading range, trend again. And this is where, okay, this would be your setup one, right? Elliott wave would fail here. Because how would you explain, if this is 3, this is 4, then what is this? But an expert Elliottician knows that it doesn't have to do a 5 up. And there's always an explanation that you can find. You can go to a higher time frame and find it. Oh, it was actually a A of a B of a C of a D of an E of an H of a K somewhere, right? You can
Point 1, 2, or 3.
yeah. You can't explain it. There's always a way of doing it.
Capital K with small a.
Yeah. I mean, if you ask me, I would say, oh, that's because the hourly chart, the umbrella of a fourth wave, is happening. Ah, really? Okay. Yeah, the hourly chart is actually going sideways, so that means you can expect that on the 5-minute chart, wave 3 will most probably be not followed by a wave 5 up. Oh, look at this on the 5-minute chart. When you put the box on,
Yeah, it's nice on the 5-minute.
this was just simply the break of the
I
snap.
love boxes, man.
Yeah. Trade the 5-minute chart after the first hour. I suggest this to everyone. I mean, especially when you see breakout and then it goes into a trading range, just switch to M5 because the volatility after the first hour or two suits the 5-minute chart better. For example, here, I mean, in this conversation, this is the first time I'm actually feeling that, oh man, I wish I didn't start this thing. I would have been short, you know. But I'm quite happy with those wins up there. This is a really so. Before we finish, there's one more thing. Okay, up to here I wasn't sure, right? But when you see this bull candle, you can always mark this. You can go down to the 1-minute chart, and this will create that pullback for you. But I wasn't really sure about this, and I didn't really want to trade it up to there. But after this candle, there's a pretty good chance that there will be another trend candle. So if I drop to the 1-minute chart here, you see, I don't really see. As soon as I go to the 1-minute chart, I don't really like this chart here. As before, I mean, if we went to this chart, it gave you so many chances. If you miss this, you were long here. If you miss this, you were long here. If you miss this, then you were long here. Specifically this one. See these? Highs, highs, highs. Pulls back. Another one. So if you're a scalper, you go long here, you get out there. You go long here, you get out there. You go long here, you get out there. Then there's another scalp. Then there's another scalp. But if you are a swing trader, then you get in here, get in here, get in here, and follow the boxes like this. Oh, the box is such a beautiful indicator. Because if you're on the, if you have the box, sorry?
Very powerful. Sorry.
Yeah, say that again.
Okay.
I said except for the B trap box.
No, B-trap is really important, powerful information. I actually sell B-traps. This here, that's the first B-trap. I sell here.
Yeah.
I sell these as well. When I'm in the mood of doing this, and this is your PC, so I would buy here.
Yep.
But I honestly, when the market's turning into a trading range, I want to stay away from it because
Yeah, I'm not ready for trade ranges yet. That's another new skill.
even if you're ready, there isn't much money in it. I mean,
Yeah.
in most cases, I make my money in this and then give it back here. So I find myself I call myself clever, good trading, when I'm able to avoid the trading range phase like this. Because if you go long here, you would still have 10, 15 stop loss. And then how much do you make? 10, 15. So this means that you'd have to have 60, 70% win rate with this. Otherwise, you'll just... And then so you had a winner there and a winner here and then a loser and a loser and a loser again, right? So it kind of balances itself out. So just go for trends, man. Yeah, this was nice. Trend reversal. This is nice. Breakout. Forget about trading inside those. What else? I think, yesterday was, yeah, US session was very nice. Quite similar to what we did today, if you ask me. So here my entry kind of got late. I waited for the breakout and then a little bit more. I think there was another entry here as well. It's not showing on this chart. This is pretty nice. And then I've taken that first pullback for a scalp as well. Oh yeah, this is that example, Alina, from yesterday. I know that the trend has changed, but you know, in this beginning, that momentum is still kind of there. So I went long and took another scalp, knowing that it might stop here, because I had the idea that it might be turning into a trading range now. You know, the wave 4 that we talk about. To that commenter, the nice guy, he always comments on the videos. Thank you very much. This is your wave 3, and then when you're going into a wave 4, you know, this is what happens. So inside the wave 4, we took a scalp, then we took a long, messed it up. Actually should have stayed. I just got kind of cocky about this. Like, I don't want to be in this. I don't like trading. Well, you're in a bloody trade. Just stay in there. But anyway, I found my senses back, and I went back in, and then I took a breakout add-on, and then, so there you go. Very good trading last 2 days. I'm really impressed. I did, well, not very impressed. Kind of, yeah, I did some really stupid things yesterday between this. So there was quite a lot of win profit, but in between I lost quite a lot as well, and I'll tell you how I lost it. So I think I was late to actually accept this here. By the way, Sam, you went short on the 1 minute or the 5 minute chart yesterday?
On DEX?
Yeah.
Yeah, it was 5 minutes pullback, and that was also set up one on M1 at the same time.
Yeah, this would definitely create a setup one on the 1 minute chart.
Yeah, yeah.
This would definitely do that. Let's have a look at it.
I should have stayed in for...
Out of date. I need to renew the license.
Beautiful template.
Yeah.
Old.
Yeah, that's the setup one. 3 down. Let me just change this. Make the Ames wave. Where is it? This does not require a license. So yeah, that was the setup one for yesterday. This is a beautiful way of trading. 3 down, 4 up, price is stuck inside, purple above, go short, setup 2, go short again, and boom, 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 boom. If you followed the boxes, this would be a huge winner. Huge winner. 1 ratio, probably 10 or 12. But you got out somewhere here, right?
Yeah. No, I had a hard TP set at 5R. But around that time, you didn't know, right? Like, I mean, who knows? Like, it's gonna go.
Strategies, man. Don't mix them. If you trade setup 1, just let it run. At your stage, you have to let it run. It's not about 5R or 6R. Just let the market give you what it wants to give you. There is absolutely no reason to get out, especially even if you're on an M1. You know, box.
Yep.
Just let it run.
No, ever since I put the box back, it gives me a lot of context. So in the new plan, I'm just using box now along with
Box
the
is
MAs.
important for you because you have learned the market, the way the market moves through the box, because box is the price.
Yes.
Literally, when you have the box on the 1 minute chart, right, like this, you're actually looking at the 5-minute candle chart. So if you're not used to assessing the market situation and the way the market moves using candles, and you're used to the box, then stick to the box. So that means that if you trade based on the box, like so, you're actually trading the 5-minute naked chart. But if you're not comfortable with that, you stick to the box. So for example, today, box is going up, trending up, breakout, pulls back, you go long, stop loss here, long, stop loss here. Or, 8 years ago, or was it 9 years ago, 1 year into the forum, Steve uploaded something called ITB, in the box trading. I was really angry at it first, but then when I looked at it, I was like, oh yeah, that's fantastic. I think I should have adapted that concept into my trading long ago. The in the box trading was basically this: price comes down, and when it starts to go up, basically it's a pullback. So when you see it stepping up, just go long. That's the in the box trading. And in the box trading is a great way of scalping as well when the market is in this kind of phase. So with limited knowledge, traders will mix up things. So this is good pullback. Why? Because market is trending. Take the first pullback, second pullback, maybe a third one, maybe even a fourth one, but fifth, sixth, don't. But if you do, know it that the trend is probably going to an end. So scalp only. If I got in here and got out somewhere here, I probably would get in here and scalp it. But I'm not going to scalp this and this. And then when it fails, no. Look at it. Box, I think the strongest point of box is that it helps you identify a trading range really easily. Yep. And you know that once in a trading range, don't touch it until it breaks out. So you took a very good entry here. Are you out now?
No. No.
What are you playing at? What are you trying to do, mate?
No, it's just waiting for it to close up over there.
Trail, M5 trail is done. Okay. Yeah, this is good. Up, sideways, down. End of story. Not touching this chart again. Well, I actually stopped all the way there anyway, but it's moving. So that's it. My short is still running on the pound dollar, by the way.
How is your UJ going? Spiked up yesterday. It was famous today.
Oh, look at this today. I haven't even looked at it. Ah, nice. Do you know where I'm long from? Here.
Nah. I knew a couple of days ago you put long here, but it was... Yeah.
I went long here.
Yeah. Mm-hmm.
But the damn thing stopped me out here. And I blame myself for doing that. No. Sorry. Not this. I went long here. So I did the Alina. I went a little bit too early. Hold on. For the people who actually watch this video, why I was long here is that it's this concept here. So let's remove these lines. So the concept that you see, that's what I love about daily charts. If you understand the 3 phases of the market, and then you apply that to the daily chart, and when the market gets stuck in that phase, it stays in that phase for months. Look at this. we've been talking about UJ since here, right, Sam? When it was going through this, you were trading the forex seed and stuff around here.
I had one attempt as well. It didn't break the previous high.
On the hourly chart, you were short from here and here. You were adding more, and I was thinking, this trend is coming to an end. I've seen dojis actually went long here, and I'm still long on that position from there. Add on. And then I considered this as another pullback. And then I thought, okay, we have a triple bottom here. I'm going to get in early, even before the breakout. So I went to the hourly chart. And when I saw this, people are seeing downtrend. But if you go to my trading plan on the blog, you'll see where I say that if I see that the daily chart is in an uptrend, I'll always go long on the hourly chart when it goes down. So I went long here, but unfortunately, stupidly, I used a very tight stop loss. So I got stopped out overnight. So then I waited another day for it. And then yesterday I went long here. And then I also went long above the high, obviously, So my entry is here and here. And there we go. It's a fantastic win. And that's the beauty of daily charts. It's so clear and obvious. I mean, I missed this short. I was focused on so many other things. I'm gutted that I missed this because I traded the shit out of this this trading range to my advantage, I mean, look at this. So we can see around this phase, and this goes with that market cycle that I'm talking about. You have a breakout phase, then you have your first pullback, the market turned into a trading channel, right? Up, down, up, down. With this trend candle, the symmetry changed. And this was your first pullback entry. Oh, this is where I should have been short from. And I should be short from here, here, and then there as well. This is actually I was kind of iffy. But guess what I've done with this? I'm so proud of myself on this. I never used to trade like this. You know where I'm short from, Sam?
Nope.
I'm short from here.
You missed the previous two, right?
No, I'm not short from here. I missed all of that bloody thing. I was focused on, my discipline challenge and all of that for the M5 because I was having trouble with that.
That's a nice entry.
I'm short from here, and the idea again, if you go to my trading blog, I've explained it there, but I'll explain here as well. If I see that the daily chart is in a downtrend, I would go on a 4-hour and the hourly chart. I would look for, every time it goes against the daily trend, I'd go short. So I went short here. This day, not the first one, the second one. Well, the reason I'm going on the second one is that this exists. If this did not exist, I probably wouldn't have gone short, right? You get my point?
Yep.
So we see this, a huge rejection, a bear candle, price comes back to it. I'm expecting it to react again. So I even went down to the 15-minute chart here and I went short. My stop loss was only 15 pips. But just to be safe, I put 25. And then I handed it over to the daily chart. And there's another add-on below this. Oh, actually, I don't have an add-on. Yeah, that's what I was pissed about. This is not my swing account, so we don't see the entries, but that's the entry. There should have been an add-on here because this is proper pullback, right? Although there's a bit of, climactic kind of move, so I was kind of iffy about this. So UJ is going very nice. I probably am out of this because I considered the pound dollar to be in a wide range. So if you look at the weekly chart, we are in trading range, aren't we? Most probably, but a wide one.
Yep.
So it's still profitable. I mean, trading the daily chart, if you know what you're doing, this is like shooting, stationary targets. It's so easy. It's like, hitting straight drives all day long. It's like, somebody has a old ball that doesn't swing, and they just put it there.
Or pitching.
Yeah, over pitching, and you just straight drive it. I mean, it's an over pitch delivery. You can hit it for a 6, but you're like, nah. It's a test match. 4 is enough. I gotta go for 6, right? 6 means I can get out as well. 4 means very low chance of getting out. I'll go for 4s all day long, unless it's last 10 overs. Love cricket. Love cricket. Cricket is I think the only thing I don't like about cricket is, colonial thing. You know what I mean?
Yep.
Some of my friends, there are a few of my friends who would say, cricket, yeah? Still stuck in there, aren't you? You never get out of the English rule. The British Raj is still in you. They got you. I'm like, no, man, forget it. Cricket is good. I'm not playing this year, man. I'm upset about that.
Thanks, Timmy.
Is it because of
head now?
Right, yeah. I think we need... Oh, look at that.
Fullback?
Fullback.
That was M1.
Anyway, I'm not interested. I'm not going to trade this. I'm going to hit the gym. It was lovely to talk to you guys. Thank you very much for
Thank
joining.
you, guys.
Yeah, and let's trade later and see you tomorrow, Sam.
Yeah, thank you. See you tomorrow. Bye-bye.
Bye now.
Bye.
Bye, Lena. Bye, Doug.
Is it?